The third of the three most common ways you would invest your savings is number 3, alternatives. Alternatives. Am I spelling that right? I'm a terrible speller. Okay, so alternatives cover, it's a pretty broad bucket. Okay, and I think I mentioned a little earlier in this video, even real estate is probably considered an alternative versus public market stocks and bonds. But there are some alternatives that you can get via the public markets. So gold and silver is an alternative, and other commodities are an alternative. But you can buy those in the public markets now through the mechanism of the exchange traded fund. So if you wanted to buy gold, you could do it a couple ways. You could actually go buy the gold at, like, a gold bullion store, buy, sell gold, whatever. There's places you can buy it. Or you can go buy an exchange traded fund where they buy the gold, they store it, and then you buy into the collective ownership of that gold through the exchange traded fund. Now, some people say you got to own the gold yourself. It's literally got to be like gold you can put in a safe, because when the, World War III, world comes to an end, or, fiat currencies explode, we're going to go back to buying food with gold, and your exchange traded fund will have imploded, and you won't be able to access any of that gold that you think you own. And so you got to buy it yourself. So buying gold as bullion would be truly an alternative. But buying gold through the mechanism of an exchange traded fund, that's a public markets thing, and it's not that uncommon. So in a way, you could say it's almost as common as stocks and bonds. You can buy other, what I would consider alternatives, through public markets as well. And when I say that, it's like, can you get it through your average brokerage house? Like if you go get an account at Fidelity or Robinhood or Schwab, what can you get through that brokerage account easily? That's what I consider public markets. Derivatives, i.e. futures, contracts, and options, would be considered alternatives, but they can be bought and traded through your brokerage account. Though you usually have to qualify with your brokerage house to trade options, and sometimes they make you take a little course or a little exam to make sure that you're sort of a sophisticated enough investor, because the risk there in derivatives is higher than owning the stock yourself. Other alternatives would be things like notes, for example. You could be a hard money lender to other real estate investors. Some person I know invests in medical receivables. You could do notes for land, a whole variety of things. Now, these are things that you can't get through your brokerage account, and you kind of have to go direct to the people that offer these investments. Oh, another one would be like oil wells or mineral rights, things like that. So there's a lot of firms out there that offer these alternative investments other than public market stuff, but you got to go buy it direct with them. Now, I should say this third method is kind of third most common, but it's really 3A, because 3A would be alternatives that you can get as an unaccredited investor. Accredited investor essentially means that your net worth, not including the equity in your home, is at least $1 million. That's kind of the general benchmark. You have to usually prove that to whoever you're getting an investment off of that requires accreditation. But some alternatives you can get as an unaccredited investor through the public markets mechanism, or there are other types of crowdfunding websites these days where you can get into private real estate deals, or you can get into structured notes, or you can get into various kind of unique things, or funds that are managers that trade options. You can buy into a fund and they trade options or whatever. Some of those don't require you to be an accredited investor. But more often than not, when you get into the alternative category, especially if you're going direct to like a private real estate developer to be part of a real estate syndication or the oil wells or whatever, you're going to have to be accredited investor. So it's kind of like 3A and 3B. B, I would say if you're in the B category, accredited, you are kind of outside what I'm calling like the most common ways you can invest your money. You're probably a more sophisticated investor. You're probably older. You have more money, obviously, and so on. So, and the last alternative investment is the one we all have heard about, and is cryptocurrency. Cryptocurrency is, in my opinion, an alternative. It's become, it's its own asset class to a degree now. Just a couple days ago, the first ETF for spot Bitcoin, meaning the actual Bitcoin itself, were approved by the SEC, and they went online for purchasing. I think thereby stamping Bitcoin as a truly its own asset class. And to become an asset class like that within a 15-year time period is pretty crazy. So there's Bitcoin as sort of the digital gold of cryptocurrency. After that, you have what's called altcoins. A lot of those are more like stocks, really, of Web 3.0. So I'll do a video on crypto and go into this a little bit more detail. But you do have to educate yourself and realize where there's more reward, there may be more risk. Financial managers generally try to get you that 7 to 10% while mitigating the risk as much as possible, both for your benefit and theirs, so they stay in business. So they don't go too crazy on the risk scale. Not a bad thing, but again, higher return you can get on the savings, the quicker you get to the promised land. So something to keep in mind. It should be motivation to get educated on finance and investing, and get yourself where you want to go sooner. All right. Thanks very much. Bye.